Oil prices are certainly kind of undermining that idea because of its relationship to both inflation as well as to economic growth. So here's what you need to know before the bell this morning. Oil prices have rallied here just in the very short term, rallied a bit and are kind of getting back to overbought conditions. But again, it remains overall very weak. And again, as we kind of look at where earnings are going to go, where we're going to see economic growth head, et cetera, this decline in oil prices is worth paying attention to. And again, this is what is kind of, undermining some of the more exuberant outlook for earnings going into the fourth quarter of this year and then into really 2025. Next year, they're expecting right now, analysts are, an 18% growth in earnings between Q4 and the end of 2025, so 12 months forward. But oil prices are certainly kind of undermining that idea, at least as right now, because of its relationship to both inflation as well as to economic growth. So again, as the Fed is cutting rates, there's a lot of expectation that things are going to take off to the moon. But again, one of your primary economic commodities is oil, and that certainly doesn't show the relative strength that you would want to see in a much improving economy. Again, you kind of go back and look at this chart, 2020, 2021, right? So you can see that big drop off in oil prices in early 2020 when we shut down the economy, right? Exactly what you would expect. And then we sent everybody checks. Everybody started driving to Home Depot to buy stuff and go drive back home to build, pools and decks and whatever they wanted to buy to build at their house. But all in 2021, all that stimulus led to more and more demand economically. That led to more speculation in the oil market, which led to higher prices. And again, then of course, in early 2022 was the Russia-Ukraine conflict, and that really was the spike. And remember, back then, everybody was like, oil prices are going to $300 a barrel, and then that never happened. And ever since then, real economic activity has continued to decline as that stimulus and all that money is leaving the system, and continues to show more economic weakness than economic strength. And again, this is going to be one of the factors that ultimately plays into the stock market. And again, if we kind of look at the stock market itself, and this is kind of the key thing here, is that right now there is no concern whatsoever with the stock market breaking out to all-time highs. We've been kind of wrestling with this for the last couple of days. It's just simply a function right now that the markets are continuing to do well, and as we continue to break out to these new all-time highs, markets are very overbought. We're extremely deviated, but we remain on a buy signal currently. So again, there's no real short-term concern within the overall market, but the dichotomy between what's happening with energy and the markets certainly suggests that somebody's wrong. And we'll see. We don't know who that is yet. We'll figure that out. But keep a watch on energy, because again, it has such a big impact on the overall economy, and is such a good kind of focus point for understanding supply and demand in the economy. That relationship between oil prices and the market should at some point start to play catch up. Either a really good rally for oil, or we're going to get a correction in stocks, one or the other. That's what you need to know before the bell this morning.